As I'm sure you know, interest rates here in the US have gone down quite a lot over the past month or so due to some unforeseen circumstances. And as a result, this means that the amount that you're earning in your savings account has likely declined as well. Plus, the Fed just made an important announcement with an important rule change on savings accounts that impacts millions of individuals. So if you want to know exactly what's going on and some of the best alternatives since interest rates are so low currently, then be sure to stick around to the end. Let's jump right into it. What is going on, everyone? I hope you are all having a fantastic day. If this is your first time on my channel, first of all, welcome and thank you for clicking on my video. Be sure to subscribe for new videos every Monday, Wednesday, and Friday, and hit the like button if you do get value out of today's content. So, like I said, we have seen interest rates here in the US fall all the way from 2.5% less than a year ago to the lowest we have seen in several years, currently at 0.25%. Obviously, when the Fed lowers interest rates that are offered to banks, then this change is then reflected in your savings account. First of all, the reason that interest rates typically fall during times of economic difficulty is that it makes money less expensive to borrow. This encourages lending and also gives individuals the option to finance items that can help get the economy back on track. And as we'll talk about in a second, lower interest rates also pushes people to invest their cash rather than keeping it in a low interest savings account. But on top of that, just 2 days ago, the Fed also made an important change to Regulation D, which previously stated that savings accounts or money market accounts were limited to 6 transactions per month into or out of that account. Now, maybe you had no idea that this was even a rule, or maybe you don't even have a savings account. But if you're anything like me, you're probably wondering why this was even a rule in the first place. And honestly, I'm not really sure since this doesn't really make a whole lot of sense. But since this rule has now been lifted, this means that you can now more easily move money from your savings account into other accounts like checking accounts or investments. While it doesn't seem like a big deal, this is actually great news since the money that is sitting in a low interest savings account is actually losing value year after year due to inflation. Remember that the average inflation here in the US is typically somewhere around 2%, meaning that if you're earning significantly less than this, your money is actually losing value year after year, even if it's hard to visualize this on a 1-year increment. I know this doesn't sound like a big deal, but over a long period of time, this could be the difference that really changes your financial future. For example, $100 in 1980 could buy a lot more stuff than $100 today. And that change in inherent value happened over time, and every year you keep your money in a low interest savings account, it slowly becomes worth less and less. Okay, so obviously moving your money into a higher interest account is a good enough incentive for most people, but there's also a lot of psychological research that shows that you are much more likely to spend money when it is in a savings account rather than something like an investment account. In fact, one study from Harvard showed that the average person is nearly 100% likely to spend any money that's just sitting in their savings account. Now, to me, this doesn't make a whole lot of sense, and to the average person watching this video, it probably doesn't make sense either, but keep in mind that the average adult here in the US doesn't even have enough savings to cover a $1,000 emergency. So what this shows us is that when you can easily access the money by spending it, then you are much more likely to do that. However, simply moving that money into a different type of account, such as an investment account, can significantly reduce the psychological desire to spend this money, knowing that it is consistently growing and growing over time, and pulling that money out could be really damaging to your financial future. Okay, so all of that psychological stuff is great, but again, most people simply want the best interest rate possible. Well, one great alternative that I did talk about in a recent video on my channel actually gives you the best of both worlds, and that is the Robinhood cash management feature. Now, there are plenty of other services that offer this exact same thing, like M1 Finance and a bunch of others, but this is simply the one that I personally have experience with. So essentially, the Robinhood cash management feature and the other features that are like it give you quick access to your money while still being able to invest that money at a moment's notice. Wait, didn't I just say that having easy access to your money means that you're more likely to spend it? Well, yes, and that is proven true. However, the research also concluded that the reason that you're more likely to spend money in a savings account is not because it's just easier to access, but because the money that's in an investment account, you know that that is going to benefit you in the future, and therefore you are less likely to spend it. Obviously, the concept of a savings account does the same thing, but for most people, earning a 0.01% interest doesn't exactly get the blood flowing, and it isn't motivating enough to keep you from spending that money. So with that being said, I think that something like the Robinhood cash management feature is a great option that really does give you the best of both worlds. Plus, they now are rolling out a fractional shares feature that is a really great option for a lot of new investors, since this means that you can purchase $100 worth of Amazon, for example, instead of having to save up over $2,000 just to purchase one share at its current price. However, there is one major roadblock that really is the whole reason of moving your money into a new account in the first place, and that is that Robinhood's interest rate has plummeted along with most other banks. A few months ago, the cash management feature offered 1.8%, but that has now fallen all the way down to 0.3%, which is still better than some accounts, but trust me, you can get a lot more than 0.3% even under the current circumstances. So obviously there are tons of options and ones that I'm sure I don't even know about, but I want to focus on two of the best options where I personally keep a lot of my own wealth that is not actively being invested. First of all, any of your local credit unions will probably offer a much higher interest rate than any large national bank would, but I know this depends on where you live, so be sure to check with your local credit union because that might actually be your best option. Alright, so beyond that, one of my personal favorite high interest options is one that I don't hear talked about very often, and that is a CD. A certificate of deposit. This is very similar to a savings account, however, it is not liquid, meaning that you cannot access these funds for a given period of time, which is predetermined by the financial institution offering the CD. However, in exchange for you leaving that lump deposit untouched for a given period of time, you often get a much higher interest rate. Now, most places do have a minimum deposit for a CD, and usually the more money you put in, the higher interest rate that you're able to get. One of my personal favorites right now is from Ally Bank, and currently they offer an 11-month CD with a 1.5% interest rate as long as you deposit $5,000 or more. They also have other rates above and below that depending on how much money you're willing to put in, so depending on how much you have, you could actually get a higher rate than that. And the CDs also have no penalty, meaning that you can actually withdraw the money early if you need to. But again, a CD is typically designed to have you put your money away for a short period of time and earn a pretty decent interest rate on it as a result. So if you do have a large lump sum of money that you know you don't really need to touch and you know you're not going to invest it anytime soon, then a certificate of deposit could be a great option for you. I know that option is a little untraditional, so another more streamlined option is actually through Discover Bank. Now, I'm sure you've heard of Discover for their great beginner credit cards, but a lot of people don't know that they also offer a pretty fantastic banking service as well. It comes with no hidden fees, no maintenance fees, no minimum balance requirements, as well as a free debit card, free checks, and free ATM access. Plus, they have fraud monitoring and fantastic customer service, and their online and mobile platforms are really among the best. And of course, the most important part, and the reason you're watching this, they also offer a 1.5% interest rate, which, to give that some perspective, Chase Bank currently offers 0.5% interest, and that's if you have $250,000 with them. Bank of America comes out slightly ahead with a 0.06% interest rate as long as you have $100,000 with them. And then of course we have the very controversial Wells Fargo, who offers an embarrassing 0.01% interest. I mean, what did you expect? So while I know there are a lot of ways to get more than 1.5%, it's pretty rare that a large national bank will offer 1.5% like Discover is currently offering. Plus, like I said, Discover has some of the best beginner credit cards on the market. I personally am a longtime customer of both Discover's credit services as well as their bank services, and really I find that they are a fantastic combination when put together. Also, just a really quick side note, if you do want to get the Discover It card, which is my personal favorite for building up your credit score, then the first 10 people to use the first link down in the description will get $50 for free when they apply. And this is a pretty small channel, so be sure to claim that while it's still there. And once those 10 people claim it, I'll take away that link. So if you do still see the link in the description for Discover, then that means you can still get your free $50. Back to the savings accounts, keep in mind that the rates that we talked about can change at a moment's notice, but at the time of filming this video, those are my two personal favorite picks that are accessible to most people. As always, if you have any questions at all, feel free to leave them down in the comment section below, and I am more than happy to give you my unprofessional opinion, and let me know what savings account you think is best right now, since I'm sure there are ones that I don't even know about. Be sure to subscribe for new videos every Monday, Wednesday, and Friday, and hit the like button if you did get value out of today's video. Thank you so much for your time, take it easy, and I'll see you in the next one.